afternoon, everyone, and happy Friday. Welcome to Stock Market Today. You have Alyssa Corm and Ed Carson here to break down not only went down in today's session, but also the week. And we're here to provide you some perspective on what to expect for the week ahead. So, Ed, give us a little preview of what we're going to be talking about today.
Yeah, Ali, we're going to talk about a bunch of stuff, but Wells Fargo, Cleveland Cliffs, and Square, they're all near buy points as we closed out the week.
Okay, well, let's begin as we do every Friday with a look at Thinkorswim from TD Ameritrade. We have the NASDAQ Composite and Candlestick. So for Friday, we had the NASDAQ down about 0.4%. So tech lagging today. On the upside, though, we had the Dow up 0.4%, the Russell 2000 up about 0.5%. The S&P up 0.2%. So coming back in a little bit, the NASDAQ did at least on Friday, but overall, it was a pretty solid week.
Yeah, I mean, all the major indexes rose this week. The NASDAQ hit a record high on Thursday, the Dow and S&P on Friday. There was some of the growth stocks, some of the more speculative names, the highly valued names, they may have come down a little bit more. Of course, they've been bigger winners over the past couple of months, but you've seen some of the software names have a little bit more damage today, but not damage, but just losses. But all in all the major indexes are up. We're all at record highs. Nothing's really extended. So generally a constructive week.
Yeah, and it was nice to see earlier in the week a successful test of support at the 21-day line. And if we go on over to a weekly chart here, and then of course, I usually have to zoom in a little bit more of this, so that actually looks pretty good. So this is the weekly perspective, Ed. Do you think we can expect this trend that we're seeing to continue, or how much more room potentially could we have before we start getting concerned?
Well, I mean, the indexes don't seem extended, even the NASDAQ 100. There is the issue for growth stocks. You might ask, can Treasury yields fall anymore? But you could have said that 2 months ago, and then they fell 30 or 40 basis points. So you just want to keep that in mind, but you don't want to say, like, I'm ditching all my growth stocks because maybe Treasury yields will rise or something. So, I mean, the indexes look pretty good. I will say one thing, it's been a little bit difficult buying stocks. Over the last 3 or 4 weeks, the NASDAQ has ultimately ended up around where it was. But if you bought near the highs, chances are you were buying on strength, which makes sense. You want to see some strength, whether it's breaking out or hitting a pullback. Well, there's a good chance you're buying near the top. So I can imagine why a lot of investors, especially, might have seen some of that. You combine that with a couple of earnings losses, and you might think, oh, it was difficult. But, that's just something a little bit, hopefully we can have a more steady ascent without earnings. But I just will say that that's something probably investors are thinking as they're going through these issues.
Yeah, potential for getting shaken out, which is why we like to talk about buying stocks that aren't extended, even if it's in that 5% buy zone. The closer you can get to the buy point, or if there is an early entry, that is definitely very helpful. And let's go on over to now MarketSmith, where we can check out the S&P 500. You also mentioned Treasury yield, so we'll take a look at a visual representation of that here in just a little bit. But the S&P, it looks like it was able to break out today over this trading range that it's been hovering around, oscillating around that 4,400 level.
Yeah, I mean, the financials, which actually had held up relatively well in the past couple of weeks, a lot of them broke out today. And just that jobs report, especially after some mixed economic data earlier in the week in the US and China, that report really signaled, okay, not just for the Treasury yields, but if the economy is going to do better, then that's good for industrials, commodities, just gets that kind of feeling going. So it's not a surprise the S&P is just sort of popped a little bit above there.
Okay, and here is the Dow. A similar situation here, Ed. And now small caps, which have kind of been maybe a little bit of the thorn in the side, if we're talking about breadth, but finishing the week on a positive note here. So we'll go ahead and look at the weekly chart. So we do have a couple of up weeks in a row here now for the Russell, up about 1.1% for the week. So getting close to that 50-day line. So that's really the test. We want to see small caps getting back above that level.
Yeah, if you could get that above that level without the major indexes getting extended, if you can get that breadth widened out, that would be really nice. Getting above the 50-day and then moving towards highs, because it's come above the 50-day line a few times. But it'd be really nice to actually see it go there. But this is a really big test, in the near term, just sort of a minimum test. It's sort of like that's a passing grade, sort of. You'd really like to get above the 50-day,
Mm-hmm.
and then see if it could move higher from there.
Yeah. So speaking of breadth, a little bit of improvement is what you're seeing.
Yeah, I mean, a little bit. I mean, you saw some things over the last couple of weeks, the home builders, some of the steel plays. I mean, it's uneven here and there. On the other hand, some of the retailers came off. So it's always a work in process. It's still somewhat of a narrow rally. It still feels somewhat narrow in that regard.
Mm-hmm. And you mentioned it was another big week for earnings. So we had some really nice reactions to earnings, some not so great reactions to earnings. And let's take a look at 0TNX on MarketSmith, which I apparently typed in
Oh,
wrong. There it is. So we did get a bump here, a pretty big bump today in the 10-year Treasury yield.
yeah. And so look, the wider the spread is between the 10-year and the 2-year, better for banks. They borrow on the short end, lend on the long. That's the classic thing. And then for tech stocks, especially the highly valued one, you discount their value based off of sort of the interest rate. So the higher the interest rate, then you start discounting that future growth potential. So that's why some of those valuations could come pressure. As long as Treasury yields are sort of slowly grow, I mean, I don't think, it seems like growth stocks could do fine because that would price adjust a strong economy. Nobody's going to be upset if the economy is doing very well. It's only when the Treasury yields spike higher that it becomes an issue.
Yeah, like in this period
Yeah.
in February and March, which, no surprise, coincided with that big tech sell-off. Okay, so now let's take a look. You mentioned the strength in financials. So Wells Fargo WFC gaining 3.8% today, breaking out to new highs. So this was a stock that looked pretty good, and we featured it on IBD Live as well this morning.
Yeah, I mean, there were a number of financials that broke out. This one broke out clearly. It was above average volume. It wasn't the most tremendous volume, but it was pretty decent volume. It had a nice run earlier in the year, and it just coinciding that. But even when the Treasury yields came down, it gave up some of its gains, obviously, but it consolidated. Now, it actually shored up as the yields were still coming down. So, it was sort of ready to go. Not only is it the yield spread, but if the economy is growing, more home loans, more loans in general, it's just a good environment for banks.
Mm-hmm. So a breakout here for Wells Fargo, and it's about 1% above its high from May. And next on our list, we want to go ahead and check in on CLF. Before I go, though, Wells Fargo, that was our stock of the day today. So that's just another great place where during the trading session, you can get ideas. We are often highlighting an actionable stock, Ed.
Yeah, I mean, we were really trying to go for what's the most interesting stock, breakouts or right nearby points. Every once in a while, one that's breaking down if we're really looking for it. But yeah, really, it's just a great way to learn about the company. Learn not only that there's a great stock, but learn a little bit about it.
Mm-hmm. Yeah, provide that context there. And CLF also on our radar, down about 4% for the week. So going on over to a daily chart, it's actually a good thing maybe that we saw CLF pulling back this week, because the week before we saw, really the 2 prior weeks, we saw an upside reversal closing right at the 10-week line. Last week followed that up with a gain of 15%. So maybe not surprising to see a pullback, but for those who are wanting to get some steel exposure, the formation of a handle can be a very good thing.
Yeah, there's a lot of nice things. It was just running up so much. You sort of had, yeah, you're right. Had to expect that. So when it came up to the high the first time, like a week and a half ago, it's like, man, that just feels extended. And because there's just that risk of a pulling back, and it sort of pulled back sort of toward, 2355, or that area where, sort of a handle, sort of a resistance area, or you could use that. There's lots of places where you could do it. Sort of pulling back to a natural area. If the stock rises a little bit more, you could argue that it's breaking the trend line in a handle, or you could buy it at the old buy point, or do it in stages, like buy a little bit as it breaks above. And there's a number of other steel stocks that are doing this as well, but this is just one of them. A lot of them are sort of having this similar formation, probably because steel prices were doing the same kind of thing.
Yeah. And another reason why it's good to see a pullback here is because of the personality of this stock. It tends to pull back after it breaks out. So the closer you can catch this one to its 10-week line, I guess I could draw a little bit of a longer trend line there, roughly from the highs. Maybe that would have been the most recent spot, but again, seeing the stock closer to its 10-week line may not be a bad thing, even though it is still at these levels at 8.6% above the 10-week. But we always like those handle shakeouts, so this will be one to watch.
Yeah, I really like that point about the character of the stock. I mean, I think it's good about early buy points, but what you said about this one, there's some that are doubly so. There are some that are like, no, you really want to try to capture that early one. So that's a really good point.
Yeah. Well, hey, we've been talking about it a lot on IBD Live, so I'm definitely not the only one pointing this out. And Square garnered a lot of attention from the IBD team this week with a big move on earnings. So heavy volume coming into the stock. Will also flip on over to the weekly. So even though it pulled back in a little bit on Friday by about 2.4%, still closed the week up over 11%, Ed.
Yeah, and you can see that massive volume for the week as well. Well, it was really amazing because Monday morning, like before the open, this stock was down 5%. It looked like it was going to be because of the big acquisitions, some mixed earnings. So you could have, told his tale that this was going to be a bad week. Oh boy. But market tells you what to do. Big move off that 21 day, that sort of breaking that handle and sort of coming up there. That was a buy point. You could argue that when it cleared yesterday, that it was sort of an additional power in there. It's sort of in between those, but it's definitely actionable. It feels actionable. It's in that range. It's where you could still be initiating a position. The up days had the higher volume and the better price gains than the down days. So it was just, there was a lot of positive action despite the fact that it is a wild and volatile stock.
And Square faring much better after its quarterly report than peer PayPal, which it's trying to find a bottom and come back up still below its 50-day line. But boy, did this one gap down on its results. So interesting to see that Square is now moving in the opposite direction.
Yeah, you would have said a couple of weeks ago, PayPal is the leader.
Yeah.
And you want to follow the leaders, but you just have to be aware that those leaderships can change pretty quickly.
Yes. And now let's talk about the week ahead, Ed. So again, it was another big week of earnings. What should investors be thinking about this weekend as they prepare for another week of trade?
I think that, well, first, so they should just be looking at their holdings. Are their holdings in good shape? Do they feel like, obviously, are you sitting on some losses? Or some stocks you should be paring back, or stocks that you feel are too extended? Just also, I really think it's, this, we may want to diversify a little bit. I don't want to panic about treasury yields or anything, but we have some other things, whether it's home builders or steel stocks or financials. So there's some opportunities out there to maybe balance out your portfolio with leading stocks. So you're not just in, say, software names, and so you can make sure that you don't get caught out, that you can, and also, these stocks have ebb and flows, and it'll be easier to hold on to stocks that are still trending up, even if they go down a little bit. If all your stocks go down 7 or 8% and you're fully invested, you're going to have to cut, might have to start paring back, even if none of the stocks look bad. But if you have that mix, you can sort of ride them. Steel goes up this week, software goes this week, and you can do that. And hopefully you can sort of, work your way up, not with losers, but with a bunch of stocks that may not always be in sync with each other. But if the rally is still trending higher, it's a way to, avoid the big losses and also hold on to these stocks through the longer term.
Yeah, such a good point there, Ed. And not only are we highlighting stocks that are standing out in the various groups, whether it's software, whether it's financials or steel, we are doing that. But also, if you're more comfortable getting exposure with an ETF, of course, you still need to pinpoint a proper entry. But we even talked about that today, whether it was XLF or FAS on the financial front. So like you said, have a little bit of that diversity, even though CAN slim traders are often running more concentrated portfolios.
Yeah, you still want to be concentrated. You still want to be leaders, but make it maybe a little bit more diversity among your leaders. That's all.
Yes. All right. Thank you so much, Ed. And thank you all for tuning in. We'll be back on Monday with more live right before the opening bell. So we hope you join us over on IBD Live for a lot of fun where we're discussing actionable trade ideas. We have special guests along the way, a lot of educational tidbits throughout. So we hope you join us, investors.com/IBD Live. We'll see you then. We hope you have a great weekend.